What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, the first day of the Fed meeting is under wraps. The S&P closed just a little bit in the red after having a nice after hours and pre-market. I said it in the video I made yesterday that the markets were just a little bit oversold on the news that was presented to them from the issues going on in China, and I figured investors were going to come in and quickly scoop up some of those gains. However, with investors' eyes really closely on what the Fed's plans are, I figured that the volume was gonna slow and the market was gonna sell off going into the close today, and it's exactly what happened. In this video, I want to go over a couple plays that we had today. I'm also going to explain them in a little bit deeper of a fashion to give everybody an idea of exactly how I come up with these price targets and these price points. And then I also want to talk about AMC because a lot of people are reaching out to me with the nerves are raised, and I'm going to just talk exactly about what I see happening. So let's get right into it. First off, let's take a look at the SPY. And I said it was going to get a little bit of a bounce because it was just so oversold too much. And it actually started yesterday after hours pre-market, had a little bit of a rip right as the markets opened, and then it sold off and pretty much continued to slowly sell off all day long. I will take a quick look at the daily chart just to show that we're still kind of bouncing on that 100 moving average, and we haven't had a reversal happen yet. You can even see it as the MACD is completely pointing down as of right now. I expect the markets to still be a bit choppy going into tomorrow. There's only so much time until the Fed gives definitive plans on when their asset purchasing is going to, the tapering is going to begin, and when interest rates are going to start rising. Every single month that goes on, the nerves just get risen a little bit more because, like I said, there's only so much time before eventually they have to pull the plug. One thing I want to correlate right now, especially with AMC, as people are reaching out to me saying, oh, what's going on? We're under 40, we're under 40. We broke below that 43 support, the 40 psychological level, and so forth. Take a look at the SPY right now. Take a look at this chart, a little bit of a rip at the open, and then immediately selling off, and look at it, especially yesterday as it ripped right into the close. And if you take a look at AMC, which was down almost 4% today, the charts are pretty similar. Now, it did have a little bit more of a sell-off going into, after lunch yesterday, and a little bit smaller of a rip going into close. And the same thing, a little bit smaller of a rip right at market open and a little bit more of a sell-off. But look exactly what's happening. It's trending with the SPY. I was taking a look at this. This normally doesn't happen. It might follow the Russell 2000, which it's kind of following as well, but it's really following closely to the SPY. And all this says to me is that the market, I do not believe, is ready to crash yet. Now, I am a big believer that there are a lot of things that are overextended right now. Their easy monetary policy is just gone way out of control, and they truly are kicking the can down the road. And while all of this might be looming in front of us, I do not believe we are ready for a market crash yet. I don't think that things have added up and they're ready to pull the plug. As much as, like I said, they're continuing to kick the can down the road, but a natural correction is going to happen, and it is healthy for the markets. And all this says to me is that when the market begins to correct and it begins to go back and charge to all-time highs, which I believe it will take another run at it in this year, AMC is just going to follow and rip even higher. When the SPY might be down just under 0.5% and under 0.25%, AMC might be down 3 or 4%, but the same thing's going to run vice versa, especially if it's trending with the markets right now. And the bulls are lined up ready to pump their money. They've pulled a lot of money out of the market, as you can see, hitting a high of 454. We're already down $21 from that price point. The bulls are on the sideline, and when they pump that money into there, you better believe that the rips that we're going to get are going to be much higher. So seeing this beginning to trend the markets is actually a good sign to me. It used to just be AMC and GME trending together, and no matter what the markets did, they did their own thing, which means that when the big money starts to step back in, it's not going to follow. But now seeing those stocks trending with the market, it's going to follow. Now, this does completely go, does not include, I should say, not completely, but does not include the fact of if the market really, really sells off, and all of these big, institutions and hedge funds are over leveraged on margin, and the margin calls begin to be flowing in, that's when you're going to start to see some of these gamma squeezes and short squeezes begin to happen as each individual, fund begins to fall. Now that's completely aside, but so that doesn't happen quite yet, and all we are seeing is a little bit of a market correction. AMC sitting at $38, $39 as the SPY is beginning to pull down, hit down almost at 5%. Okay, and as we do, let's say, head to that 10%, AMC is holding up very well. And so when the money comes piling back in, it's going to reap those rewards. Just keep that in mind. Now, I want to talk about a couple of the plays we had today. I really want to highlight this one right here, NNVC. And I said that it was a previous runner. I said a rip above 560 gives room for about a 50 cent to $1 squeeze to the upside, and a break below 480 and leave it alone, as it should slowly sell off all day. Well, first thing, I do want to highlight this right here, that it did have an unusual halt. I believe it was about 3 hours. I think it was about 3 hours. I might be wrong on that, but it did have an unusual halt that had happened pre-market due to some server issues and whatever else was going on behind it. But like I said, I kept this on a very close target. And one thing I want to point out when I talk about those two numbers, when any of you are investing in stocks, and this can be used as a swing strategy, a long-term strategy, or anything, it's basic support and resistance. And this came up on my pre-market scanner at around 7 o'clock this morning. I alerted this at around 9 o'clock. And as I began to trend this, I said, okay, you have a low right now of about 480. That is the lasting support. There was only a couple touch points, but that was their previous known support. And I knew that once these high runners, these quick plays that are, running 60, 70, 80% in a day, which yes, some of them do run multiple days. I like to just play them really quickly. And especially, we've talked about this numerous times, the market that we are in right now, this is a quick play market. And I had said, as long as this hangs above 480, this is going to continue to be in play. And I came up with that 560 as exactly where the most previous resistance was. I always say this to everybody in the group. I don't need to hit the valleys and the peaks. I don't need to time it perfectly. I could have purchased this at 480 and wrote it up higher. However, it also could have purchased it at 480 and then it completely dumped down to $4. And therefore I just lost a good chunk of the money I had invested in the stock. So I like to wait until it goes to that next leg up, which this is not just my strategy. This is something I've learned from numerous other people who are very, very far ahead of me when it comes to the investing game. And I'd said as soon as it got above that 560, it was going to go and go and go. And because this actually had halted and it went later on in the day, there were some other stocks that were the volume was a little bit slower and it gave a lot more room to happen. And once this thing got immediately above it, it halted for the first time. It actually halted again, going all the way up to a 786 level. But as you can see, that 480 lasted as crazy support. And even if we zoom in closer to what happened at, right at open, you can see, a little bit of wicks. And this is what's known as soaking right here. Whenever you see these wicks come below and the big blocks sitting right there, that's known as soaking. That means that there are buyers immediately ready to step in at those price points, which is a very good sign as you're looking at the charts. This is looking at a 1 minute standpoint. It's a very good sign, just saying, this is not going to break below that price point, because there are buyers right in, and there was volume coming into this. You look at this one right, I think this is right after the halt, over 2.1 million. Even on this first tick, this is almost 1 million. That's someone that's coming in. They're seeing it. These buyers are right here, ready to go, and that's just an awesome sign. So I hope this gives you a little bit of insight to exactly what I see when it comes to finding support and resistance, and where I like to enter my plays when it comes to these quick plays. So that's it for this video. Feel free to leave a comment down below, and I'll see you in the next one.